Hey everyone, Mr. Thrive and Survive. It is March 28th, 2016. This is Mr. Thrive and Survive Rebooted. This video will be posted on the Edge of Truth, and I will notice that in the next Thrive and Survive video. I'll put it in a card so people who may miss it on either the regular or the rebooted site. For now on, these will be on exclusively on the new site, theedgeoftruth.com. And for you on the Thrive and Survive Rebooted location, I will always give you a notification for quite a while anyway when a new video is updated on the Edge of Truth. Anyway, let's get into this. This is going to be a very quick update. We could be at the turning point for the markets. This is going to be an interesting week. If you haven't kept up on the long picture, I'm not going to go into that this time. Next week I probably will refresh you on where we are long term. We were following last time, suspecting that this bottom was in for this minute wave one down in the S&P 500, and I think we were somewhere in here. Last we spoke, we were heading back up, anticipating a wave two retracement. That is exactly what we've gotten. The question is, are we finished with the wave two? It looks like we either are or we have one move left. Let me show you how I'm counting this. We had the initial off the wave B highs back here, which are barely on here. We had a series of ones and twos, and then 1, 2, 3, 4, and 5 for a minute 3, and then a 4, 5 for a minute 1 in the first part of a wave 3 down, which itself will be a wave 1, but that's a little bit complex at the moment. All we have to know now is that the first downturn in earnest either is right here at the doorstep or we have maybe a week to go. As a side note, the Treasury bonds look like they're getting ready to take off in the upward direction. That tells me we are possibly on the brink of war, because I can't imagine any other reason why people would rush suddenly into U.S. Treasuries other than the possibility of war. So we will see how that turns out. Anyway, war and oil look to be getting ready to be bullish soon. I'm sorry. Treasury bonds and oils are tending to be bullish soon. We'll cover those instruments at another time. Anyway, it looks like we have the wave 2 would come back at an ABC retracement. A, B, and C. The C wave should be in 5 waves, 1, 2, 3, 4, and 5. We can count 5. There is another way to count this, where this would be the end of wave 3, and now we're heading in a wave 4 down, and then a wave 5. The wave 2 ended up being a pretty sharp down, so if this is a wave 4, we would expect some sideways movement. You get alternation. A sharp downturn usually is followed by a sideways or triangle type of deal. So if we start to form a triangle, we can expect a breakup in a wave 5. I don't think we're going to go much higher than 2080. These blue lines are the first time I've put the long-term support and resistance lines on here. I may modify these because I'm looking at these from short-term and from memory also. So anyway, it looks like we're ready to start the attention getter. This should be the attention getter for all the public. Of course, the other indexes in the United States will follow this as well. The NASDAQ is the only one that is significantly on a different count, but it's also on a bearish count as well. So let's switch over now to the metals and see what we have going on there. Okay, here is silver on a daily basis. Again, I'm not going to be covering the longer term charts this week. Very good news. I'm going to take this question mark off because I believe we can now mark the bottom of wave A or wave 2 on the longer term. Either way, the bottom should be in. The last time we were talking, we were pretty confident of a 1-2, hoping we'd get the follow through 3, 4, and 5, and that's exactly what we've gotten, to a wave 1 up. We are due for a retracement down here now, and boy, it's been a long time coming since we have actually put Fibonacci retracements on in a bull market. Good news, guys. The short-term outlook is bearish, and that is because we are in a bearish count now. We should go down in an ABC down to a wave 2, and then explode higher in a wave 3. So, but the real good news is the intermediate term is neutral instead of bearish, which was bearish all the way down here until, actually until just now. And the long term is also neutral. This long term I will explain again in another video, not this one right now. But the good news is I am going to then call this bottom in right now for silver. And now we're looking at the retracement levels. Technically, we could say we've had an A, B, C down, and technically we could reverse from here and go up. We have retraced to the 38.2% retracement level, which is pretty typical for wave retracements. However, that's more typical for wave 4 retracements or wave B. Here, it would be more likely to have a 50% retracement or even deeper for a wave 2. Wave 2s can indeed retrace 100% of the market. So in this case, let me tell you what our retracement levels are. For the 38%, which I don't think is going to hold here, is 15.18. It could hold here, but I don't think so. I think we're going to be going a little bit lower here. The 50% retracement, which is more typical of the wave 2, or 61.8. The 50% comes in at 14.88. 61.8 comes in at 14.58. In my opinion, this is your last chance to get silver at these prices, either now or whenever this completes. Again, we could go as low as 13.61, which would be a 100% retracement. These may be a few cents off. I did not draw this on a very exact scale, but within a few cents of these numbers right here. So anyway, this is spot silver. We are definitely, in my opinion, now in a bull market. Once again, we've had our 5 impulse waves up. It is finally, by the way, in this area here, for the first time, it started to close the gap on the gold-silver ratio, which was well over 82 or 83 to 1. It might even have gotten up to about 85 to 1. But silver has shrunk the gap a little bit recently. And as you're going to see in a little bit, gold also retraced a little bit more than silver, which is typical because gold outperformed silver on the way up. So here's your silver update. Let's go over and take a look at gold. Okay guys, here's gold, and all the people that say you can't not tell what's going on with the charts, they've been eating humble pie since we were calling the wave 5 potential bottom back here in December, right at the beginning of December of last year, or 2015 I should say. And ever since then we've caught it directly all the way up the line. And even starting with the 1-2, and then we talked about another series of 1-2s, and then we would head on up, and that's exactly what's happened. This one is labeled better than silver, by the way. And we have indeed, last time we were at the 3, we were working on this triangle, and we had a day or two left here, and I said look for a breakout in a day or 2 or 3 or whatever to the north. We got it. I think it was 2 days later. And we ended up with our predicted wave 5 top right here, and we got up to about 1288 in spot gold off of the low of around 1045. So that's a pretty nice run up. This is just wave 1, guys, just wave 1. Wait till we get to wave 3. We're working in a wave 2 down now, and here's another reason. This is why gold and silver should both be looked at together. We haven't even reached the 38% retracement yet on gold, and that would be very unlikely if we start heading up in our wave 3 and completing wave 2 here. Although we have had an A, B, C, we could. That would indicate extreme bullishness. But I'd like to see the RSI get a little bit lower for that wave 3 setup. And so we should expect gold to minimally go down to about 1195, 1167, or 1138. I can't remember what the reason why I was looking at, but 1180 looked like a good retracement number for me. Or 1200, somewhere in this area. That looked like it would be a decent wave 2 retracement here before we head up. Our wave 3 should dwarf this wave 1. And I don't have it listed here, but the short term and intermediate term are bullish for gold. Long term is neutral. So next time we'll cover more of the longer term. So the time, if you want to get in my opinion, pay attention only to your own advisor, would be to accumulate physical right now. You guys got it right when you said don't buy it. When I said, I was talking about the possibility of getting 10,000 in stocks or whatever, which was a feeler to see if everybody was still on board, because I do have a lot of different people, and everybody was great with that. He told me don't buy anything but the physical, and that's absolutely correct. By the way, if you want to comment or you want me to cover anything else, for now on, I'm looking at the comments on the Edge of Truth. I'm not looking at them on YouTube any longer. So I will be uploading the videos there, but the comments and the people that I find are coming over to the Edge of Truth are the ones I want to be talking to, and so that's how I'm going to handle that. So if you just scroll down from the video on the Edge of Truth, there'll be the comment place, just like you can comment on YouTube. You do have to be, just like YouTube, signed in to do it. But once you're signed in, as long as you don't clear your cookies, it doesn't go away. So there's the update here. Hopefully I'm going to try to make this a weekly occurrence. I'll be back next week, hopefully on Sunday as well. And try to keep these in the 10 to 15 minute category for these little updates. And when we go longer term, they're going to be probably in the 25-minute, give or take 5 minutes, I would say, type of update. So with that, I'll end this. Again, if you would like me to comment or cover anything else, leave the comments on the Edge of Truth below this video. The link will be in a card, so you can go right there. Just click on it or right on the screen. I'm not sure how I'll do it, but it'll get you to the Edge of Truth where it's located there. Take care, guys.